Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, May 24th, and we are now in the final hour of trading for the day and the final hour of trading for the week. This has been an interesting week. The markets have struggled. I think we've done okay considering. I think we've navigated the charts and the price action pretty well this week. What we're going to do today, the format for today is first we're going to run the legal disclaimer. Then we are going to take a look at my current positions and talk about when I got in the positions, why I got in the positions, and how we're going to manage the positions going forward. After that, we're going to go through each one of the stocks in my watch list, and we're going to analyze each chart, looking for support and resistance levels, possible entries, possible resistance levels, and see whether or not there is any kind of setup that I would be interested in taking at the end of the day. As you know, I believe that the closing prices of the day are the most valid prices of the day, and therefore the best prices to use to make my decisions on whether or not I want to enter or exit a stock. So, all right. Okay, so let's go ahead then, run the legal disclaimer. We'll get that out of the way, and then we'll get back to analyzing the market. So hold tight, be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay. All right. Well, let's take a look. Let's just take a look at the market. So currently the Dow Jones is up 115 points. NASDAQ is up 22, and the S&P is up 8. There's some days where you look and you see that the indexes are up, but you look at most of the stocks and they seem to be down, and that's one of these days. Obviously, something's up, but seems like everything is down today. So, all right. So let's go ahead and take a look and see my current positions, when I got in them, and why I got in them, and how we're going to manage going forward. Okay, so I did buy Apple yesterday on Thursday. The reason that I bought it is we came down below the 100-day moving average, closed back above the moving average. My stop on this trade is going to be a close below. Oh, sorry, this is the 100-day moving average. So went down below, closed back above the 100-day moving average, and at the same time we were in a low RSI range, 30 to 33 range. It almost tested the 30 intraday. So currently it's going to be it's right on the bubble. If it does close below the 100-day moving average, 179.81, I will be exiting the trade, just trying to keep my loss very small. You can see this was my first profit target, second, third. Did not quite get to my first profit target, unfortunately. I think it was about 18 cents off, something like that. So currently 179.81 is my line in the sand. Currently we are under that by just a little bit. Certainly can come back up, but this is the key to profitable trading. Set your line, set your entry based upon indicators, basically based upon where there are going to be buyers. And I know there's going to be buyers around the 100-day. I know there's going to be buyers around the 30 RSI, 33 RSI, but it doesn't mean it's going to go up. I just know that groups of buyers are going to step in there. And as you can see, it looks like it did. They did. Immediately went up, but again, if it closes under 179.81, I will get out, just take a very small loss, and wait for a better setup. I bought Google back here on the 20th of May, and the reason that I did buy it is a few days before we had this big, strong momentum bar up on large volume. The next day it got up to a 50 RSI and then failed, and so had I purchased it here, I would have sold it here, but I did not have the position. So I was just patient, waited to see whether or not it would come back into the halfway point of this bar, because anytime you have a large up bar or a large down bar for that matter, you will have some inherent support at the halfway mark. On the day that I bought it, on the 20th, it did test the 200-day intraday, closed back above, tested that halfway mark, closed back above, and that is why I entered the position here. It did start moving up immediately. I did get out of 22% of my position at higher levels. Yesterday, we went down below the 200-day moving average. And remember now, the 200-day moving average is the line in the sand, or the stop based upon the closing price. So it did go down intraday, but then it closed back above, keeping us in the trade. It did gap up today, tried to go a little higher, but unfortunately has reversed. So if it does close under the 200-day, which is 1143.05, I will be exiting the trade. So basically this line here, this pink line here. So we'll just have to wait and see. It's going to be interesting to see how the market closes with the long weekend ahead, and the drama that sometimes happens politically over the weekend. So it really will be interesting with the long weekend and just a regular weekend, how the market will factor this in. And who knows, we may get a rally here in the last part of the day, and we may sell off in the last part of the day. But again, profitable trading is about picking a level where there's going to be buyers, and then getting into the trade, and then trying to pick a stop loss that is very close to where your entry was. So if you're wrong small. You can see 1145 to 1140.73 currently. That's just a few points on a big stock like Google. That's not much. So if it closes under the 200-day, I will get out, take a very small loss. Good thing I did hit one profit target. That mitigates some of the loss if it goes down, pays for your commissions. Your commissions over the year can add up to 20% of your profit. So it's very important to, one, use a broker that has low commissions. I use Interactive Brokers. Most of my trades are about $1 a trade. And, if you use someone like Schwab, you're looking at $3.95, $4.95, four times for the same service. So it can really add up. And I'd like to give you my good advice of finding a low cost broker, because those really, really add up. So underneath the 1143.07 mark, or 1143.05, now it's changed, I will be exiting this for a small, very, very small loss. IBB. I did buy IBB back here on May 21st. And why did I buy it? Well, we had this lower low. We rallied up to the 50. We rejected the 50. We came back down. But then we had a nice pattern. We have a V2 pattern. And a V2 pattern incorporates 3 bars. You have day 1. Day 2 goes lower than day 1. Day 3 closes above day 1's close. So, a V2, V1, V2 pattern are my favorite entry triggers to get me into the trade, as long as the context of the chart is also agreeable. But in this case, not only did we have a V2, we made a higher low, and I always like taking trades from a higher low perspective, because it means a group of sellers are already gone out of the equation. The people that bought here sold here. This drove it down. Now these buyers that bought here and sold here, they're out of the equation. So whenever you have I'm sorry, sellers. Whenever you have fewer sellers in the equation, it's easier for the stock to go up. Doesn't mean it's going to, but it does make just common sense, right? That if you have fewer sellers around, fewer groups of sellers, that it's going to be easier for it to move up. And then also on this V2, we came down. See the green line? This is the -1 ATR channel. We rejected the -1 ATR channel. So far, it's about even from where we bought it, although I did hit one profit target up here today, 20% profit target. So I took 20% of my positions off, and you can see it is now lower than where I hit my profit target. So at the very least, I've paid for the commissions on this trade multiple times over. And had you just bought it and held it, and then it dumps on you, you just get the loss and you don't even get a partial profit to pay for your commission. So that is why I am a big fan of phasing out. So currently right now, it did almost get to the 50 RSI, but not quite. This blue line is my 50 RSI level. Had it got up there today and reversed, I would lock in the profits, but it did not hit the profit target or the level that would tell me to exit the trade. So I will be holding this until one here. This was our initial stop loss because it's halfway bar of the V2 configuration. I will just be holding this until we come back down, close back underneath this support level, the halfway of this bar. Or on the other hand, if it starts to move up further, I will then start trailing it, but it has not moved up enough for me to really start trailing it at this point. So it's okay. There's nothing wrong with the chart. There's no damage to the chart. So as of right now, I will be holding this, but glad that we did hit one profit target. Okay, IBB. Boy, this was a disappointing trade. I took this yesterday on the 23rd of May. And why did I take it? Well, just like IBB, we have this nice V2 combination where here's day 1, day 2, day 3. Day 2 washes out day 1, and day 3 closes above day 1's close. We also on day 2 rejected the moving averages, and then yesterday when we purchased it, it rejected all the moving averages, and it was a higher low. So it was a nice trade. MACD was also positive, showing that there was positive upward momentum. But today it just puked. Halfway of the washout bar, the day 2 bar, day 1, day 2, day 3, halfway of the washout bar on a closing basis will be my stop. So if we close underneath halfway of this bar today, I will be getting out, just taking a small loss on this and moving on and looking for better trades. If for some reason this does hold and does close above the halfway bar, I will keep that and hold it over the weekend. So we'll see. Right now it doesn't look very promising, but you never know. You never know what's going to happen in the last hour of the day. So that is the plan on Philip Morris. Oh, just give me 1 second. Okay. Silver. I did buy silver back here on the 20th of May. And why did I buy it? Well, there are buyers that come in at the 30 RSI level. And during the day, we went under the 30 RSI, and then we closed back over the 30 RSI, which is a positive indicator because the market tested the level below the 30 RSI, rejected it, and then moved back and closed above it. So that is one good positive indicator. Also, this thicker line here, this thick gray line, is the third ATR channel, and about 88% of all price action stays within the -1 ATR channel. I'm sorry, the -3 ATR channel, and the +3 ATR channel. So just by the fact that it went below the ATR channel, the third ATR channel, and then closed back above, that is positive. And then on top of that, we had the under 30, over 30 RSI signal. So that is why I bought it. My initial stop was a close back under the 30. I think it closed back at like 31. So if it immediately reversed and closed under 30, it gives me a small loss. It gives me a small loss level, but my target is all the way up here. So you can see maybe this is a 5 or 6 to 1 risk to reward ratio. I may lose 1, but I have the potential of making 6. And that's, that's the equation that works for profitable trading. You have to have larger wins than your losses. You have to make up for all the losses. In any business, when you're selling something, that is your cost of goods. And obviously you want to keep your cost of goods as low as possible and sell for the highest price. Well, it's the same in trading, because in the trading business, your losses are your cost of goods and your wins are your sales price. And so any business always wants to keep the cost of goods lower and sell for a higher price. That makes the business more profitable. It's the same thing in trading. So you have to keep your losses small or your cost of goods small, and you have to try to get the highest price you can for the sale of your goods, or in trading case, the sell of your stock. So that is why I bought it. You can see it's moved up nicely. I did phase out of 3 profit targets yesterday, so I'm now out of 66% of my position. So I don't have a huge position left in this, but I am going to wait and see. A close underneath the 5-day moving average probably makes sense to me as far as my trailing stop, for a reason to get out of the trade. Or to the upside, if we move back above, we get to the 50-day moving average, we test, the 50 RSI, we test it and reject it. That would also be a signal for me to exit the trade. So moving forward, a close below the 5-day moving average on the downside, I would go ahead and lock in the small amount of shares that I have left. Or if it tests the 50 RSI up here, that will also be, if it tests it and rejects it, that will also be a signal for me to get out. And of course, if it does keep moving out, I will continue to phase out. So glad we had silver. It was a big down day yesterday, but having some of these metals helps mitigate the loss. Okay. SPY. All right, so quickly, I'm going to go through this in case I know I show this graphic every day, but in case we have new people today, I want them to know what we're talking about. So what I do is I buy the SPY, which is the S&P 500 ETF. I buy it every day at the end of the day, and I sell it the first thing in the morning. And why do I do that? Well, it's based upon this study. So since 1993, if you would have bought the SPY on the open in the morning and sold each day at the end of the day in the afternoon, so buy in the morning, sell in the afternoon, since 1993, you would have actually lost 5.2% of your capital by doing that. But if you did the opposite and you bought on the close in the afternoon and you sold at the opening the next morning, so buy in the afternoon, sell the next morning, you would have actually returned 568%, meaning that more than all performance came in after hours trading. And you can see the graphs. The green is the buying in the afternoon, selling in the morning. The red is the buying in the morning, selling in the afternoon since 1993. And you can see there's, which side would you rather be on? So I take that trade every day. I buy 10% position size in the afternoon, sell it first thing in the morning. Now, even though it's a long-term profitable system, as you can clearly see, there are ups and downs in this system. So you really can't base the results over a week, over a month. I would say basing it, I'd say over at least a year or 2 years, you really get an idea of how this is doing. But the work's already been done. The study has already been done. So I will continue to buy the S&P on the close, sell it on the open every day. understanding that there are going to be difficult times, but in the long run, it's profitable. So with that being said, I did buy this here yesterday near the close of the market at 281.99, and I sold it first thing in the morning at the open, 283.79. So it was a profitable trade. You can see, well, we got pretty close to the high of the day, and then it did sell off. The last few weeks has been pretty brutal, although I'm still net up using this approach, but I do really like it. I have my discretionary trades. I have my buy the S&P in the afternoon, sell it in the morning. That's a different system. I have moving average crossover trades. So, when you buy stocks, you don't want to buy too many correlated stocks. But when it comes to your systems, it's important to have different trading systems also to help even out and smooth out your equity curve. So it's not a good idea to be too correlated in any one sector. And in my opinion, it's better to have multiple trading systems. So you're not reliant on just one particular trading system as well. In my opinion, it smooths out your results. So, okay, that's what we got. So just a real quick run through. So Apple, if it closes under the 179.81, I will be out for a very small loss. We're very close. Anything could happen. Google, a close below the 200-day of 1143.05. I'll be getting out. Currently, it's under. IBB looks fine. I would wait for it to come back to 102.70 before this chart proves me wrong. Philip Morris. Definitely looks like you're going to be wrong on this trade unless it closes back above 85.30. Silver is just fine. I'm using the 5-day as my stop, and the SPY, I'll be buying the SPY at the end of the day. All right. Hey, Frederick, how you doing, my friend? Good to see you. Good to see you. How are things in France tonight? Thanks for coming by. All right, well, listen, let's go to my watch list and see if there are any setups for today. All right, we already talked about Apple. Amazon. We really spiked down underneath the 50-day moving average strongly yesterday. We did open up higher, reverse lower. For me to get involved in Amazon at this point, we'd have to either go down, test the 30 RSI. That would be one area to be looking at. Right down here would be perfect. We'd be in the 30 RSI area, and we would also have the support of the 200-day moving average underneath us. So that would be in my opinion, that would be a great entry point to be buying Amazon. And on the upside, a strong close back above the 50-day moving average might also be a potential buy to the upside. But where we're at right here, we're kind of in no man's land. I know sellers are going to come in up here. I know buyers are going to come in up here. I know buyers are going to come in down here. But in this middle between these moving averages, most professional traders are going to look at that and wait for something to happen either to the upside or the downside, and kind of like a self-fulfilling prophecy that may move it down here to test the 200 level. So nothing on Amazon. Macron says hi to me. Oh yeah, he called me the other day. I didn't get back with him. Tell him I'm sorry. I'll try to call him this weekend. Boeing. Well, had Boeing closed above the 200-day moving average, this would have been interesting to me. One, because we would have made a higher low. People that bought here, sold here. This drives it down. But again, the people that bought here and sold here, those sellers are now out of the equation, and it was still able to move up. But you can see it did test the 200 and rejected it wholeheartedly. So also, we have a fractal here. Here we have a high with two lower highs to the left, two lower highs to the right. That is also a good indicator, but I like when the fractals close based upon the closing price above the high, not just intraday. So currently on Boeing, I would not be interested in Boeing here until we close back above the 200-day. That would be my signal. Alibaba is still under the 30 RSI, so really there's no interest in me on Alibaba whatsoever, unless one, we can close back above the 30 RSI, but ideally I'd like to see this close back above the 200-day. To me, that would be a stronger signal. Caterpillar. Well, we have stopped the downward movement at least, and we have moved sidewards, but there's really no entry point or setup that catches my eye at this moment. We did go under 30 and back over 30, but it's kept the 30-day. So if you had bought when it went under and over, you would still be in the trade. You would be down on the trade, but there's not a lot of support or indicators to me that there's really any buy pattern here. Like if we had a big move down and a huge strong move back up on high volume, that might tell me that we're close to the bottom, but as it is right here, it's just very indecisive. Canopy growth. I did buy Canopy growth here on the 21st. I hit 2 profit targets the very next day. My initial stop was the 100-day moving average, but we did go above the 50 RSI and then close back below it, and that was my signal. So that was a profitable trade. You could have made the case to use your trailing stop as the 100-day here, but my plan was if we got above the 50 and then below the 50, I would exit the trade. So I did exit the trade. It was a nice little profit, mainly because of my phasing, because I got some near the very, very top here. So as is right here, it's not really interesting to me. It does have a lot of overhead resistance with these moving averages. So we'll just have to wait and see on Canopy growth. Cisco, we did gap up higher. We came down. We did hold the low of the gap up day on a closing basis. You can see intraday yesterday we went below it, but we did close back above it. That is a positive sign. It was higher on the day. It looks like right now it's a 48.99. So it's possible that it did test the 50 today, and as it is right here, possible rejection. So I don't think I would be doing anything with Cisco. If I were in Cisco right now, a close below the low of the gap up day would be my stop, but I'm not interested in this right now. Okay, so DDM. I did buy DDM here when we closed below the 200 and back over the 200. I did hit a few profit targets. I think I got out of about 40% in the profit. Yesterday, it closed below the 200-day, telling me I had to get out of the entire position. Now it's closed back. It looks like it's going to close back above the 200. And let me show you quickly the back test on buying when it's above the 200 and selling when it's below the 200. So this is the DDM. This is the double leverage Dow. And this test is based upon a closing price, whether it's above the 200, you're in and you stay in, or if it's below the 200, you get out. So since 2000 to 2019, this approach, by using the I'm in above, I'm out below, you would have returned 300.4%, and your maximum drawdown would have been 28.8%. Had you just bought and held it, you would have only made 259%, but you would have had an 81.7% drawdown. So you can see that using this approach by being in above, out below, far exceeds the results of just buying and holding. higher return, lower drawdown compared to lower return, larger drawdown. So with that being said, I will be buying the DDM today at the end of the market because it closed below and closed back above. If I'm wrong, I'm wrong very small. If I'm right, I have a huge amount of upside potential if I'm right. So I don't know whether I'm going to be right, but the only thing I do know is that I'm trying to keep my losses small if I'm wrong and let my winners run if I'm right. So I will be buying this with a close above the 200-day. It is a double leveraged ETF. So instead of a 10% position size, I will only be buying a 5% position size, because on double leverage, a 5% position size is a 10% position size. So I hope that makes sense. Dow Jones, really nothing there. I don't think the market really quite knows what it wants to do with itself right now. So and nothing on diamonds. Walt Disney, I did add Walt Disney to the watch list. We had this strong move up on Walt Disney. We have moved sidewards, so it's consolidating. It doesn't quite know which way it wants to go. I was hopeful yesterday when we had this down bar. This is day one, day two. Day two goes below here. If we would have had a nice up bar like this, I can manipulate this. Woo! I wish I could do that. But if this is what this looked like today, where you have day one, day two, day three, day two goes below day one, day three's close is higher than day one's close, this would have been an excellent setup, because we would have had a higher low. We would have tested this 200, and it would show that we have some potential to move up. We're going to be, we're done with the consolidation phase. And whenever you have something that moves sidewards for a while, it usually is going to break big one way or the other, but we don't know which way it's going to break, and we also don't know when it's going to break. So you have to sit tight, wait for your signals. But this would have been great if it would have done this, but this is what it looks like today. So no interest on Disney. Etsy is up a little bit. Let me quickly see. Okay, so yeah, Etsy's up. It's above a 50 RSI, which is good. It did trigger a V2. You can see here's day one, goes below day two, goes below day one. Day two is now closing above day one. Day three, is closing above day one. We have a positive MACD. We're over a 50 RSI. So this actually does not look too bad, all in all. So again, we have a higher low, V2 above the major moving averages. MACD is positive, and we are currently above a 50 RSI. So let me quickly run my numbers and see how many shares I'll be taking. Basically, what I'm doing here is I'm taking my account balance, taking 10% of that, taking that number, dividing the price of the shares, 65.44, and that's telling me how many shares I should be buying at the end of the day. So, all right, so this is definitely a potential, but again, we have a V2, we have a higher low from the previous lows. So the V2 is positive, the higher low is positive, the rejection, the moving over all these moving averages positive, being over 50 RSI is positive, and the MACD being the green line being over the red line is also positive. So this is potential certainly for the end of the day. Facebook, nothing there on Facebook. Probably would have to test the 50-day moving average here to the downside to get me interested. 5 below. Yeah, this is kind of a tough one. We moved down here. We did have a nice rally. We had sellers here, sellers. Buyers came in, overcame the sellers. That's what caused it to move up. The people that bought down here as it got close to the 50 RSI. Probably tempted to sell. That is what caused us to go down. If we could have closed, if we close up here, it would be more interesting to me because we take out that previous range. Currently, we're under a 50 RSI, which I don't like because we were probably above the 50 RSI at one point here. So we can watch that, but I don't. I mean, if we can break above, we have a lot of open air. We have a lot of ability to move up, but it has to prove that it's going to do that first. Gold is up a little bit today. If we have a 520 cross, that will be my signal to enter a gold. That is a proven back-tested long-term crossover system, but you have to be patient and you have to wait for the signal, which is the 5 crossing over the 20 EMA. All right, here's our Google. We do have a position in this. Close below the 200-day will invalidate our trade, and that will be our signal to get out of the trade. So we'll see where this closes. 1143.05 is the 200-day moving average value right now. So we'll close under that 200-day, and we will exit that for a small loss. Although I don't even know really if it will be a loss because we did phase out up here. So pretty much a scratch trade all in all. Goldman Sachs, yeah, nothing really there. Nothing really there. For me to get interested in Goldman Sachs, I'd have to have a close back below 30 and back above would be good, or a double bottom with the positive bullish divergence, something like that. But right here, there's just really nothing that's interesting. IBB we talked about that. So currently we're in the money on this trade, which is nice. Initial stop will be a close back below the halfway of this washout bar, or if it starts to move up, I will then start trailing. Intel was interesting yesterday because we had such a huge bullish engulfing bar, and we rallied so hard off the bottom on such strong volume, and that was on a day where the market was down a lot. Yesterday, Thursday, was a big down day. So now we're back above the 30 RSI. This is a tough one. You certainly could buy this based upon the bullish engulfing bar to the upside. It did reject the high of the day. We're at 30.35. I do like the big volume. On the way up, I do like that there's not a lot of volume on this day. But I think I'm just gonna let that one go. If we got to close down into here, halfway of this big bar, I think I'd get a better risk to reward on that. But not sure. But when you see a trade where you're hemming and hawing and this is good, but that's bad. You have two options. One, just don't take the trade, which is probably the better option. And the second option is buy half a position. If you really don't know, you're so torn, buy half the position. But I'm not really that torn, so I'm just going to let this go. Russell 2000, it's lost that 200-day and it's pulled away. So really nothing interesting on the Russell 2000. Coca-Cola, these defensive stocks have been stronger than the rest of the market because, people are scared of what the market's doing right now. So the money flows into defensive type of stocks, consumer stocks. So that's what's been happening with Coca-Cola. Really nothing for me to be interested in here. Going forward, a pullback into the value zone, the V1 or V2 signal to the upside might be interesting. Lockheed Martin did break out into a new range and now failed, came back into the old range. Nothing interesting on that. MasterCard, we had that big down day yesterday. We've attempted to rally a little bit today, but we're still within the range of this big bar, so really nothing interesting there. Merck, boy, I wanted to buy Merck here because it broke out of this range. Nice, strong, but at the time we are so close to the third ATR channel. And remember, a lot of most of the time, 88% of the time approximately, price will not, it has a very difficult time getting above the third ATR channel. So if I bought here, my stop would be all the way back down here. So the distance for my stop is greater than the distance to my probable profit target. But it has moved up, not actually, I mean, it's up a little, but not much from where I would have bought it. So I would be waiting for a pullback or a return to value back into the ATR channels, the positive ATR channel or the negative ATR channel. So somewhere in here, even possibly back here to this was the old resistance, and we broke through it. Now it becomes support. So somewhere down in here, I may be interested in picking it up, but right here, it's just too high. Microsoft did recover nicely yesterday, gapped up, but now we're currently lower. Even though we're still up, we're lower than the open. Don't think I would be interested in Microsoft here. Netflix, it's kind of a hodgepodge of going back and forth. Like a lot of these stocks, I'm looking to try to buy them on a deeper dip than the breakouts. But if it broke out above here, that might be positive. If we tested the 200-day to the downside, that would also be positive. But where it's at right now, nothing. Nike did close above the 100-day moving average. Now it's closed below. It seems like it's pulling back away. So same thing with Nike. I'd like to buy it down here at this convergence of the 200-day moving average and the third ATR channel. Philip Morris, we have that puked on us today. Unfortunately, I thought it was a good trade, higher low V2. My stop was a halfway of this bar, so it definitely looks like we're going to be closing underneath that. So I will be exiting that for the end of the day for a loss on that trade. PayPal is just an inside bar, not doing much. The Qs are now negative. Interesting. We did gap up, tried to go up, caught sellers at that 5 EMA, and it has rejected it and turned back around. So that's not a great positive sign for the Qs to be negative now. Silver, talked about that. We bought this here. We've been phasing out. A close back below the 5-day would be my exit signal, or if we get up here to the 50-day moving average, reject it on a closing basis, then that will also be my my signal to take profits. SPY, we talked about that. Bought this here yesterday, sold right at the open, had a nice little profit on that. I will be buying this again at the end of the day. AT&T, this was one of the better trades we've had lately. Did buy it here. Had a really nice move up. We bought it because it moved above the strongly above the 50-day moving average on high volume. Then MACD went positive, giving us more confirmation in the trade. So we rode this up from here all the way to here. It did get above 70 and then closed below 70, and that was our exit signal. But that was a nice trade. That was about a 3% trade in 3 or 4 days. So that was a great trade. And as you can see, after we sold it, it really has not done anything since then. Bonds did break out yesterday on very high volume. This is people are moving money from out of stocks into safety assets because of what's going on politically with Iran and the China trade deal. So people are opting to put their money into safer assets, and that's why bonds had such a big day, and it's up again today, interestingly. Tesla has been in the news. Really has broken, hasn't it? I mean, this is a good example, folks, that if you are a long-term investor, even if you're not trading, stay out of something if it's under the 200-day. You may get chopped up a little bit until it finds a direction, but imagine, I actually knew someone that I told them on Tesla. I said, look, they were a big believer in Tesla, and I said, look, if you're a big believer in Tesla, stay in it as long as it's over the 200-day moving average. But if it's as it closes below, just get out, because it may just run away from you to the downside. And if you're not in it, you're not going to lose the money. Well, I told them about this here and they didn't listen. And now look, because every day they thought it was the bottom and it couldn't go any lower. It's unfortunate, right? I think we've all been there. So I know it's hard to not have opinions about stocks, but let the price of the stock dictate what you do with the stock, not your opinion, because the price of the stock knows a lot better than you do of really what's going on. And so, every time I see this, I feel bad, because if he would have just gotten out and stayed out, he would have stayed out of this whole mess. So if you take anything away from this live stream or my videos, if you're a long-term investor in a stock, just get out if it closes under the 200-day moving average. You can always get back in if it closes back above, right? So anyway, okay, that's my 2 cents on that. UNG, which is natural gas, it did test this bottom, moved up nicely. I wouldn't buy it here because currently it's at a 45 RSI. Most likely it will come up into the 50 range and then turn back around. So my risk from here down to here would be greater than my potential reward. So no interest on UNG. Oil, boy, got whooped up on oil yesterday. I did buy oil here when it tested the 200-day moving average, and it also tested this support, but it just fell off a cliff yesterday. As a matter of fact, a close below the 200-day would be my stop on a closing basis. But if it goes against me 5% intraday, then that's my emergency stop, and I just get out. This looks really bad. It was bad, but fortunately I took a very small position size. I took a 0.5% position size. So, I took a 5% position size, and I had a 5% stop loss. So the total loss on this trade was only 1/4 of 1% of my capital. So, to get good as a trader, folks, you need to have experience years after years after years doing it. But if you are using too large a position sizes, trust me, you're going to run into losses. And if you run into losses with big position sizes, you're going to be out of the game, and you're never going to get the experience that you need to become a good trader. So like anything, any skill, you have to do over and over and over again. And to trade over and over and over again, you have to have money in your account. And if you trade too big, you're going to lose that money, and you're not going to get the experience. So just use small position sizes. Really, it's the best thing you can do. One, for the account balance, and two, to keep you in the game so that you can get to be a better trader. Visa, I did short Visa. Can't remember exactly the price, but the reason I shorted, I think it was right here. We had a double top. We had this high here, we came down, we made a higher high, we tested this, we lost it, which just by itself is a legitimate trade. But you see how high the RSI reading was here at this level, at this high? Then you look at this high over here, and the RSI level is way down here. So the slope from here to here is downwards, even though we went higher. So that's a RSI divergence. And we also have a ATR divergence, meaning that the ATR reading at this level here was 3.5. Here, when we made a higher high, it was only like 1 5/8, 1 3/4 at the high. That is called an RSI divergence. So we had a double top that failed, we had an RSI divergence, and we have an ATR divergence. And that is why I shorted the position. And as you can see, moved down. I did take one profit target, came back up, tested again, and then failed dramatically yesterday. I did get out of the position. It was a nice profit, but the reason I got out was because we were short. We came down, we were above the 50 RSI, we came down, we tested the 50 RSI and rejected it, and that was my signal to cover the short, because I knew if there's support at the 50 and it's strong enough to hold, then I don't want to be short, right? So, and as you can see, I covered it here yesterday and it's up today. So it's a good thing I got out of the position. But that was the first short that I've ever done on this live stream. I do short, I just don't do a lot of shorts on this particular live stream. Anyway, that was a positive trade, which is good. VIX, kind of all over the place, isn't it? Let's see, Verizon, did buy Verizon here, had a nice 2-day trade for over 3% up here, which was nice. Did break out over this fractal. MACD went positive and had a nice, huge momentum trade that got out of. So, Energy Select, nothing really there. Real estate. Real estate's interesting in that we did break out and reverse back, but I'm not going to do anything with that. And healthcare. If healthcare can close above this 200, I would be interested. So, all right, we have 10 minutes. Let's take a look and see. Boeing doesn't look like it's going to do anything. DDM, I will be buying DDM with a close above the 200-day moving average based on the back test. I do like Etsy here, actually, because of this V2 entry, higher lows above, well, now it's not above the 50 RSI anymore. We'll have to wait and see on this one. And then 5 below, nothing there. So, looks to me like DDM is going to close above. Etsy, if it closes above 50, I'll take it, but I'll have to wait and see. All right, let's take a look and see what we have to do with our current positions. Apple definitely looks like we're going to be getting out of that today. Google, same with Google. IBB, we're going to keep. Philip Morris, we're going to be out of. SLV, we're going to keep. And SPY, we're going to buy that at the end of the day. All right, let me take a look real quick. Frederick says, are you going to short Tesla? No, I'm not. Not here. Anyway, the risk to reward's not that. I mean, a lot of the shorts already in. I think the smartest thing to do if you were to short Tesla is short the first rally back up. But I think you're a little late to the game here to just short here. I think you're gonna have to short that first rally. Okay. All right. I'm gonna go ahead and get out of Apple. Apple's moving. I highly doubt it's gonna move back over. If it does, then we can just get back in. But as of right now, I'm just gonna go ahead, lock in the small loss on Apple. I have to do this in a couple different accounts, so hang with me.
Order partially filled.
All right, Apple's out of the way.
Order filled.
I'm going to go ahead and I'm going to get out of the Google trade.
Order filled. Order filled.
All right. IBB is fine. Philip Morris seems to be moving the correct way. Almost certain we're going to get out of this, but we'll wait there till the end. SLV is fine. SPY is fine. We will be buying SPY. And then DDM is going to be pretty close. Etsy. Has a good relative strength today too. It's up today on a day when the indexes are barely up, especially the Nasdaq. So, all right, so we have 5 minutes. So I'll wait on Etsy till the very end, and we'll wait just a little bit longer on DDM. See if we can get a price back a little closer to the closing price. All right, so I'm going to go ahead and just buy my SPY position just so we get that out of the way. My daily SPY position.
Order filled.
All right, there we go in one count.
Order filled.
All right, 282.94. So we did get filled on the SPY at 282.94. All right. So on DDM, again, I am taking a half position on DDM because it's double leveraged.
Order partially filled. Order filled. Order partially filled. Order filled.
45.17 is the fill price. Okay, so we are out of Apple. We are out of Google. IBB we're holding. Philip Morris, we're going to have to pull the trigger on that one.
Bulletin received.
SPY we bought. All right, so really all we have to do to clean this up today is sell Philip Morris. So I'm going to go ahead and just lock that in. That was unfortunate, that trade, but that's how it goes sometimes, folks. You just have to roll with it.
Order partially filled.
But, you know,
order filled.
All in all, this was a small loss, and that's what we have to do. We have to keep losses small and be patient with our winners.
Order partially filled.
All right. So
order filled.
We are in good shape. We did get out of Apple. We did get out of Google. We have IBB. We got out of Philip Morris. SLV we're keeping. And SPY, we did buy our 100 shares of SPY. All right. Oh, and then Etsy. I think I'm going to have to buy Etsy, folks. I mean, it's all there. V1, V2, everything's there. It's above.
Order partially filled.
All right, and we bought Etsy.
Order filled. Order partially filled.
All right, there we go.
Order filled.
We got Etsy at 64.72.
Order cancelled.
Well,
Order
well,
canceled.
what a week! What a week! I mean, this was a big down week, big scary week. But actually, looking at my numbers, it was about a scratch week for me. It was about a break-even week, which I think most people would be happy with this kind of week to break even. So. Listen, before we get to questions and answers, I do want to let everyone know that I do offer private one-on-one teaching, coaching, mentoring lessons in the evening time via Skype. So if you feel like that could be valuable to you, please contact me. My email is in the description of this video and also my hourly rates. But usually I have a free initial call with the potential student, client, on the phone or either Skype, and we can kind of talk about what they need help with and what I could put together for them to kind of get them on the right path. So if that's of interest to you, please reach out. And like I said, my hourly rates and my contact information are in the description of this video. And also, if you find this channel helpful and found this video or this live stream helpful today, please do me a favor, hit the thumbs up button. It does help with the rankings on YouTube so that we can get this channel out there and so more people know about it. And, if you share it on social media, something like that, I'd appreciate that too. So anyway, all right. So does anyone have any questions for me today, or want me to look at any particular stock, anything like that? Remember, the market is closed on Monday for Memorial Day, so we'll have a day off. I do want to mention that this weekend I have a plan to do a video. What I'm going to do, I'm going to go through, let me see, I can show you right here. I'm going to go through the S&P 100. This is the top stocks, the top 100 stocks in the S&P 500. So the S&P 100, I'm going to go down through each one of these stocks and I'm going to analyze them like I do in the regular live stream. And because sometimes, we look at our regular group of stocks, our regular 40 groups of stocks, but I'm going to go down through each one of these hundreds and see, maybe there's something that has a nice setup that we don't usually look at. So it will be, if you watch it, you'll get more experience with looking at charts and seeing how I view them, how I take them in, how I analyze them. So I think I'm gonna, on the weekend from now on, I'm gonna go down through the S&P 100, analyze each chart, in detail. Sometimes during this last hour, I have to do it a little quicker because we're under time constraints. But that's what I'm gonna do. So look for that. I think it'll be helpful for you. So I will be doing that this weekend sometimes. Do you think you are influenced by the news on your trading? Do you think you are influenced by the news on your trading? I try not to be, Frederick. I really try not to be, because I believe that the smart money is making the price move, and that shows up in the technicals of the charts. What's on the news, I have to take it with a grain of salt. What the price is doing, I feel, is much more valid than the news. But, maybe what you're asking is, are you scared about the China trade deal? Does that make you not take a particular position? And I understand that. I mean, I do, but I really try hard not to let the news influence me too much. So I hope that helps. But I understand how it can kind of seep into your consciousness about, well, I'm not sure, but I try not to. Johnny says, thanks for the show. Have a great weekend. Hey, you're welcome, Johnny. Appreciate that. Thanks for showing up. I appreciate everyone showing up. And hope everyone has a really good weekend, a long extended weekend, and try to catch my video on the S&P 100 that I'm going to do this analysis. this weekend. So, all right. All right. So unless anyone else has any more questions, we're going to call it a week. And let's see. Yeah. All right. Well, thanks again. Have a nice weekend. Have fun with your family and get out, do some fun stuff. And we will see you not Monday, but Tuesday. And we'll circle back and we'll start analyzing the markets next Tuesday. All right. Take care, everyone.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.